Hello and welcome to the weekly outlook. Quite a busy calendar on the comeback from the New Year and Christmas holiday. So we're going to start off with the euro. On Monday morning we've got the German prelim CPI. Now we had the Spanish CPI which fell quite considerably the other day, and also on Friday we had some strength coming into the US dollar, which has caused this big drop down in the euro. It's come down to that ultimate target there, the 12000 level. Now it may well open up slightly below that on Sunday evening, but the German CPI month on month, the prelim CPI, is expected to come in slightly better at 0.1%, a slight raise from 0.0% last time. If that happens, I would expect to see a little bit of a rally on the euro, not of any substantial quality, but certainly up to this 50% level on the recent drop in the trend there. So we could look again to take sell entries at a 120.95 or 12100 level again and sell it back down to the 1200 level. However, if that data comes in much better than expected, then we can expect to see a rally much higher up, possibly back up to the 12250 area. Okay, so depending on that data will depend on where we get back in for the sell positions. I'm not looking to buy this at any point. The only thing that we could do on a bit of a short term, a bit of a high risk trade, is maybe take a buy when the market opens at the 1200 level, just in the hope that that German CPI will come in as expected. However, if it does come in at 0.0%, slightly lower, then we will see that bearish trend continue. At the moment, we're very low on the calendar in terms of, very low on the range in terms of where it was in 2012. You can see we're slightly breaking through that level now, and the next target there is going to be 11880. Okay, so if that German CPI comes in lower than expected, we can expect to see a drop down to the 11880 level. Okay, so that's pretty much the euro and how we'll be looking to trade it. There is various data out on the euro throughout the week, but that's really going to be the major one up until Wednesday. Then we've got the CPI flash estimate year on year on the euro. Now this is expected to drop to 0.0% from 0.3%. Now again, that German CPI data is really just going to give us the little pullback that we need to try and get into that ready for the Wednesday. Because if that data does come in as expected, slightly lower, I should imagine that a lot of it's starting to be priced into the market already. But if that does come in lower, or in fact even goes into deflation, then obviously we're going to see that euro really tumble down, because the pressure is going to be on the ECB to act and do further QE as soon as possible. Okay, so moving on through the week, that's pretty much the two major alerts out on the euro for that week. There is various little bits of data coming out, but they're the ones that we really want to take note of next week. There is a little bit out on the Aussie dollar as well. Now the Aussie dollar calendar is looking like it's going to be slightly softer as well in the data. Now we are coming to a bit of a price now where the RBA really wanted to see this Aussie dollar around about the 8100 to the 8000 level, and we're starting to hit that sort of price now. So the week data, I do expect to see a floor around about 7.8, okay, about 7,800 there. So the week data due out on the calendar next week could push this down further, but I do expect to see that sort of level out around about the 7.8 level, and probably bounce between 7.8 and 7.2 over the coming year. So really, the only thing we can do here is look for pullbacks. At the moment, we've got a 50% pullback on that current push down. It has made a new low there, so we could expect to see a pullback down to 8147 and a continuation of that downtrend, trading it down to that 7.8 level. So we'll be looking out for those data points throughout the week and seeing how they perform. Trade balance is the first one on Tuesday, expected to come in slightly softer. Then we've got the building approvals, which is also expected to come out slightly softer. And then we've got retail sales as well, which is expected to come out slightly softer on the Aussie. So 3 days there where the data is expected to come out slightly lower. The other thing to look out for is the Chinese data, CPI year on year. That's expected to come in slightly better on Friday. So that's where we could see an end to that sort of downward push on the Aussie, and we might start to see a bit of a reprieve off the fact that the Chinese economies are growing, which is a major trade partner for the Aussie. Okay, so moving on. That's the Aussie dollar and how we're looking to trade that. Now the other one that I'm really looking interested to is the pound. We've got the MPC vote coming out next week on Thursday. Now the pound has been pushing down. You can see we had manufacturing PMI out on Friday, which really hit the pound hard, and we had that huge drop right down to the 153, almost a 300 pip drop from the previous high the day before. Now, where this is going to level off is going to be a bit of a mission to see, really. And we have got at the moment we're breaking through all these areas of support and resistance. We've broken through that 61% where it held out for as long as it possibly could. We're now coming down to these previous lows back in 2012, which is around about 15264. So whether we see that start to level out there again, we'll have to wait and see. We really need to keep an eye on the data at the moment. If we go back to sort of post recession, we can see that the lows there come down to 13520. I really don't expect it to get as far as that. I think we've got to start looking at the 15,000 or the 15,000 level as being the real sort of floor on this currency pair, and I do think that we're going to start seeing a range between 1.5 and 1.6 over the coming 12 months. So once we get down to that sort of price, then that's where I'll be looking to sort of buy the pound back, regardless of what the data is. However, up until that point, then there is still opportunities to sell this down to the 15,000 level. And at the moment, we've got a 50% retracement at 15472. It did struggle to break through this 15500 level. So if we get a pull back up to there, then that will be a selling opportunity as well for the time being. So but you've got to keep an eye on that data. We need to see that vote, the vote, MPC vote. If it comes in at 207 again, then it still shows that there's a couple of members there that are still willing to raise interest rates, even though inflation has dropped right down to 1%. There are some signs of growth in the UK economy, so it is there is possibility that if you scratch beneath the surface there, you can see that we are a strong economy, and we're not that far behind the US, although we are a little bit behind. The US economy as well is expected to slow down in its growth this year due to that big spurt that it had in the second half of 2014. I don't think it will maintain that sort of momentum, and it will start to slow down slightly, which will probably give the Fed a little bit of an excuse not to raise interest rates as soon as everybody thinks that they will come, and it may well put the pound back in the spotlight. But we do need to see the data improve, and certainly we need to see inflation starting to rise back up again as well. Okay, so at the moment, again, looking for sells off the pullbacks from the pound. Any sort of weakness in the US dollar could cause this to correct in the market, and it pull back up to this 15500 level. Although it seems like it's a million miles away at the moment, it can happen very quickly, and we could see that being on our entry point for for next week. Certainly, if the MPC vote comes out split still, then we could see that pullback aided by that as well. Okay, so the other one I'm interested in is the New Zealand dollar, probably the last one I'm going to be looking at this week. We have had, again with that US dollar strength, we have the push back down. We have got the GDT, the dairy index out next week on Tuesday. It normally comes out between 2:30 and 3:30. It did come in slightly better. It had been weaker the previous times before, but if it comes in better, then I would expect to see that New Zealand dollar rally back up to that 7.8, even the 7.850 level, even 7.9 as well. So we did have a slightly less dovish approach from the RBNZ than what traders had anticipated previously, which is where we had this big spike up here back in December the 11th, and then we had that rally over the period of the holidays. So it shows that there is still a little bit of strength there in the New Zealand dollar. Overall, still looking for sells on this in the long term, but if that dairy index starts to improve, then I think we will see investors buying back the New Zealand dollar in the short term. So keep an eye out for that. Obviously, if it comes in worse than expected, then we can expect the continuation of the drop through that 7.6 level as well. So again, a good week, we're looking out for that data and assuming to take sell or buy positions on the New Zealand dollar. Okay, thanks for watching. I hope you can make some pips, and I shall see you next week.